Good evening. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up for this Monday, October 18th, 2021. All right, my friends. This Wednesday, October 20th, I'm going to hold my live webinar. It's where you get to come in, ask any and all questions you have. If you're going to ask them on SPDR's ETFs or stocks, I ask that you send them to me first. Why? Being a futures broker, I have all the futures charts. How do I possibly have all the stock charts? There's thousands of them, including SPDRs and ETFs. So if you just tell me, I'll set them up. As the meeting gets opened, I'll start covering them, and that's the way that it works the fastest. The meeting opens at 12:15 p.m. Central Time for you to get involved, to come in. At 12:30, I actually open and start the meeting formally. I end it 20 minutes later, so you're not there all afternoon, and I do end it. If I'm in the middle of something, I'm sorry. 20 minutes is all you get. And as I said, there will not be another one to mid-November due to my schedule. So in looking at how this is all going to work out, should be a lot of fun. I want you to look at the board. If you move your cursor up, just move it anywhere towards the top, click on it, and you're going to see that an icon's going to appear. That's your invite. Click on it, fill out the form, and away you go. YouTube, if you're watching me on that, makes it disappear every 10 seconds. So you have to move back to get it. It's pretty simple. So once it's not on your screen, it won't come back unless you move up there and click it. Okay, let's go right to the charts and see what's going on. Yay for Microsoft. This was pretty good. You know, it all began when we started filling in a gap here and then this one, and it just kept running. And as you look at the chart, you've got, pattern of a lower low, higher high. It has not been an easy trade. It's been an easy one to call that the bear part of it was over. The market held the 18-day moving average of closes. Where do you think the resistance is? Watch this, right here, the upper Bollinger Band. I wouldn't look for much more out of it than that. I think the market will fight a battle right there. I'm not bearish, don't get me wrong. This is where I think algos and so on that are long in this market, that's where they'll take some money off the table. That's what I'd be betting. You're overbought. You're up to the upper Bollinger Band area. That should be the area where the market fights. Apple. Yeah, Apple's announcements today, the watch, I didn't get to see it. I'm dying to go back and see what came out there, and then some of their other computer products came out today. I want to see what they said. I'm very curious to see what they said about, obviously, the semiconductors and how they're getting this all built, but the market likes it. So the next target, the upper Bollinger Band. If it gets there, you'll have gone from the lower band to the upper band. And this was not a difficult call on the downside. Remember when it got there and I said, watch out, you're ending it if you take out this high that I'm pointing to, which you did. That was the end of the bear move. Now the question is, where's the beginning of the bull move? And once it gets over this, that would be it. So now I'm looking for where? The upper Bollinger Band again, for the market to falter. But unlike Microsoft, this market's trying to develop a real uptrend. Until today's low is taken out, what is that? An outside day up. That trend is solid. Looking for that. Now the question is, because of the overbought, can you build anything off of that? I'm not too sure. ARK, Kathy Woods. Yes, Kathy, that move's going to help you to St. Augustine. And when you covered through here, this is what you always look at swing lines for. You had a clear-cut lower highs, lower lows. If you take that out, you end the downtrend, and what else? You lose the embedded reading at the same time. When you lose an embedded reading, you open the doorway to get back to the 18-day moving average of closes. Bingo. And if you keep going, next resistance now, the 100-day and then the upper Bollinger Band. Could be a lot of resistance there, but an uptrend. If you step back and you take out today's low, tomorrow, Tuesday, or Wednesday, look for a quick move then back to the 18-day average. At least that's my thoughts. Right now, if you don't lose that up here, you're not embedded. You're overbought. So be cautious. I don't think it has a lot of leg in the short term. In the industrial sector, right up to the 100-day average, the upper Bollinger Band. If you know nothing else, this is classic what I teach. You end the downtrend. You're overbought. If you keep going between here and the 100-day average should be the resistance, and that's the battle that you're fighting right now. Now, the game changes, materially changes, if you can embed and if the market just sort of hovers here for a little bit. Keep your eye on it. Materials are on fire. You know that. You're seeing that you can't get them. Supply chain issues, power issues, it's everything. I was writing today how much aluminum. Now, remember, the big producer of the world had been China. They're importing aluminum because they don't want to use the energy on that. The U.S., did you look at how much coal fire we are using again? It's the most, I think, since 2008. So because energy prices are so expensive, we too are going back to coal. Now, I'm assuming it's green coal. You know what I mean? It's not the black stuff that's going to ruin the environment, but I don't know. When we look at the semiconductors, you couldn't get me bearish on this. Why? How could you possibly be told every day that we can't get semiconductors? It'll be the end of 2022 before the market's caught up with it, and you want to be bearish. And I realize you get these corrections. Let them run the course. That's just giving you an opportunity, in my opinion, if you're a fundamental trader. Now, as a chartist, I'm always looking for the picture. The picture's bullish, but it is overbought. It could stretch to the upper Bollinger Band. I'd like to get a better picture on this. But again, this was not hard to call the end of the correction, and we did it in these videos. The market had lower highs, lower lows. If you take that out right there, you break the pattern. 18-day average should be the resistance point. You went there, you fought against it. Now the market's trying to move a bit higher with that. Got it? That's what I see going on. CNBC, the get high stocks, THCX, all these other ones, they're still very much in downtrends. Where's everybody buying this pot? Why aren't these things making a move? I can't answer it, but I can tell you they're not a buy. You know, I don't tell you what to do, but a buy from a chartist point of view, lower highs, lower lows is not a buy signal. You can negate the downtrend by getting back over 1886, but even if you do, you have an embedded reading. The pros are waiting to sell this market, in my opinion, keep driving it down to the lower bands until that reading is lost. Housing, did you see that housing number? Wow, we went up 5 points. The market wasn't looking for anything like that. Where did these buyers come from? Something's brewing there. Was that it, that we've seen the housing setback and the market stabilizing? It well could be. You know what the market did? Let's come back here. It got up and over the 100-day average of closes, target the upper Bollinger Band, not yet overbought. Today pulls back, challenges that, and goes right on up, challenging for that upper Bollinger Band. Big outside day up. You'll know that the market wants to correct again a bit. If today's low is taken out on Tuesday or Wednesday, barring that, the next resistance, the upper Bollinger Band. The energy sector, I'm nervous in the energy. In the futures contracts, and I have records to prove it, my clients had been long heating oil and crude. I got very lucky and caught those moves. I wish I could tell you that I always catch those monster moves, but it was nice to have 2 of them caught. And I told my clients to come out today and we'll start anew. But they're in the November contracts. Those are going off the board in the crude, and it's time to come out of the heating oil on that, and I'll look to roll to other contracts. Here's what bothers me on this market. You have an outside day up. You're closing the bottom of the range. You have an embedded reading. If you take out the low of an outside day up, you often go back to the 18-day average of closes. Actually, it's the closest main moving average, but it is this one. That's what I teach. You know, can I prove that it's always going to do it? Of course not. But that's what I teach. I'm wrong if you take it out and then you take out that high again. But barring that, that would be my warning sign. And if you lose this with the red line turning under 80, I'd get very nervous because I think you'll get back to 54, 58, and the game starts afresh. EEM, emerging market. I told you this looked better. Here's another one of these that was not hard the way that I teach charting to call. and I've been pointing this out, you started from here with all these lower highs, lower lows, and if you take out one of them, you never did embed. That was the end of the game. Now the question is, does it have legs? Because if it is, these potentially could be where the market goes. The first trick is to get through that 18-day average. You can see how the market fought there, fighting, and this is October 12th, so not wrong in what I was saying. But now if you clear this high, you get higher lows, higher highs to the upside, and that's just what you're getting, and there's your Bollinger Band. So traditional, if you take my charting course, I promise you, these type of elements are in there. You're overbought. My work would not be a fresh buyer in that market because of that. In gold, I would not be surprised to see the bulls try to make their stand right here, right now, at 164.47, not wanting to see prices under 163.91. Why? All you need to do is take out today's high, and you could have higher lows. You've already got the higher highs. Now, the fly in the ointment is momentum's pointing down, but with a reversal back to the upside, that'll quickly start sliding more sideways. So, interesting. The futures chart's prettier than this one right here. And in the gold miners, well, you've got how many days up in where you're over 80 readings. So today you finished off with both numbers over 80, and Friday, guess what? 3 days makes an embedded reading. Get ready. I got my hands in my pocket. I'm ready to take out my cash. And if you embed, I'll get and be trying that market. That's what I think the bulls will say to themselves. Got it? All right, copper. 1, 2, 3, 4. Did we close back over here over it? This is where you fought. Remember, I was telling you, you're fighting right at all the key numbers here. You're overbought. This is going to be a big, important number. And you finished 36.58. The upper Bollinger Band, you were under it. So here's day 1, 2, 3, 4. You rarely get beyond 5 before you move to the right-hand side. That does not mean you're going in my opinion, to go short. It just means you might want to bend over. What else is happening? You're embedding. This market may be just getting going. And I know you're going to say, is he out of his mind? What is he saying? Not out of my mind. TLT, big battleground between now. The 200-day average, the 100, and the 18-day average in an overbought market. Trend is up, resistance, support, very narrow. Battleground, very important battleground. Pay very strong attention to that. And out of this rally, I'm going to repeat it again. If you take my enhanced Bollinger Band course, you learn this stuff. Remember I told you get a master's degree in it from the Ira Epstein University. You get a 21 reading. Any reading over 21. I tell this every day to my paid subscribers. You want to be out of all short positions. So I teach them in the last 2 minutes of trade, if that happens, you cover. They should have covered. What's the target? The 18-day average of closes. More important, you've left the downtrend. And that's what the market has done. So important. And that's what charting is. You know, charting, it's really not a mystique. I'm not a pattern believer, okay? I'm more of a guy that uses the moving averages, the swing line that I created, obviously a momentum index with it, and a deviation from the 18-day average called window envelopes. It's 5 things. It's not hard to learn. Now, if you want to add your patterns, you see me talk about outside days up or down. I'm always talking about that, looking at it. You put it together. But if you have questions, and that's what I'm hoping you have, you come to our webinar. Again, all you need to do is take your cursor. If you didn't get the email, it was already sent. Move it up, click. Suddenly an icon will magically appear. Click on, fill out the form, and you're in. Can I make it any easier? I'm Ira Epstein. You have a great day, and I will see you all tomorrow. Take care now.